Hey everybody, Chris Johnson with Money Morning. Palantir is trading 20% off of its August highs as it walks a fine line in the sand. I'm going to walk through that line of the sand and tell you what it means if we go below it. Give you a little hint. It's a 15 to 20% pullback that gives you an even deeper discount to buy Palantir shares at. That's right. I've got the technical charts, the options activity, even how the analysts may come in to help set up Palantir for a strong year-end rally. It's going to take you 5 or 10 minutes. You're going to learn something new, and you'll be a better investor for it. Let's get into it right now. All right, let's jump into this right away. I'm going to take about 10, maybe even 12 minutes or so, go through the price charts on Palantir, the analysts and what they've been doing, as well as the open interest configuration. That's right, the options market and where it is road mapping the stock to go over the next 3 to 4 weeks or so. It all adds up to what could be a great buy the dip opportunity on Palantir. And I know what a lot of you are saying, oh, there's no way it's going to pull back anymore. We're down 20%, CJ. In the month of August since its highs, which is true. We saw a huge rally in Palantir after its earnings results came out at the beginning of the month. This company came out and beat expectations and they raised their outlook. That's why you saw that huge rally. But what has happened between now and then is that some seasonalities come into play with September and a little bit of that chirp or that chatter about AI companies, including AI service companies, being overvalued. And it's causing people to take those short-term profits right now. And you get a 20% decline from the August highs, those post-earnings highs. And then what we've seen here over the last couple of weeks is a consolidation. Now, I'd normally call it a healthy consolidation, but the stock is doing a tap dance on the $150 price level and the 50-day moving average. At the same time, 13 of the last trading sessions have seen one of those come in to help support the stock. And at some point, think of it like a game of Jenga or something else where it loosens up a little bit the more you tap it. Eventually, if we tap this just a little too much, that support, it's going to give way and the stock's going to make its way down to 140 very quickly. And I'll show you why 140 in just a second. But I think that drop would also imply that it could go another 15% lower than where we're trading at that $150 mark. Trust me, I got the charts to show it right now. The receipts to say, as they say. Let me also remind everybody, Palantir is one of those speculative 7 stocks, not the magnificent 7, but the speculative 7 stocks that we've got in a report. All you have to do is click the link below. eVTOL stocks, quantum computing stocks, and you've got some AI service and nuclear AI companies in that report. It's free. Just click the link down below. Now let's take a look at that price chart very quickly and see exactly what I'm talking about with that 20% drop. Here is where we saw the setup right ahead of earnings. And we did a video on Palantir and talked about the likelihood that it was set to rally up to that $180 price, which it did and then exceeded, but the stock quickly turned around and pulled back another 20% to what most of us would call a healthy correction, 20% off of its highs. 10% is usually good. In Palantir's case, though, we tend to see some of these pullbacks go as much as 30, 35, even 40% lower. So it could be a situation where when we break below this support that is drawn by the 50-day moving average and that 150 mark, which is what I've got there in red, if we break below that double-barreled support, the stock market will react with an increase, a very quick increase in volatility and selling activity that is going to take us down to the $140 level first, and then a blink at that price will take us down to $125. Now, this isn't the first time that we've challenged the 50-day moving average in 2025 for Palantir. You look back to the chart here, and you can actually see back in April a little bit of that activity as well, but we didn't have the benefit of a significant number like $100 holding us. The options market at that time was actually looking at the stock coming down to $70, maybe even $75, which is exactly what we got in April. And there is a similar situation brewing right now. So let's look at the open interest configuration, which is right there. These are the options that expire the third Friday in September. So September 19th. I've had a lot of people that have commented in the comments, hey, what expiration are you looking at? Weeklies, monthlies? always monthly expiration because that is where the largest amount of options activity is focused on those weeklies. So we're looking at the monthlies. We're looking at the September monthly expiration, which is on the 19th. And when you look here, those of you that have been following me will identify that immediately and say, well, that's a lot of calls that are open at that strike price. And that strike price is $140. Whenever we see a large call open interest strike, the peak, more meaningfully, peak open interest call strike that is below the price of a stock, the current price, which right now we're right up around here at 150, it usually results in a pullback to that large amount of call open interest. There are a number of mechanics that go into this, hedging, et cetera, all of those things that you hear, but just know that we've actually done the studies and looked at widely traded companies, and what you find is that these large call or put open interest strikes tend to attract the stock down. And if you Google it, it's a process called pinning a stock. So right now, Palantir is at risk of being pinned to that $140 level. But the problem is there's no technical support at that $140 level. When you go back to the price chart, we've broken through the 50-day moving average, which remains bullish right now, but it's starting to flatten out. So the next level that you should be looking at is the 200-day moving average. The 50 and the 200 are the most widely watched technicals, and that's why they react the most in terms of support and resistance. But right now, we've got that 140 level, so that's your first break after 150. And then notice that the peak open interest puts are down here at the $125 level. That puts us another 15% below where we are right now and where I come up with my targets. One of the things I always love to watch, and especially with Palantir, is the analyst activity. And in Palantir's case, this is a standout. And this comes into play in terms of the buy the dip opportunity and why the stock may start to see, and I say may because we don't know if the analysts are going to start coming off of their fence, but we've had the majority of analysts have been in that hold camp, and they have remained there. Even though you've seen Alex Karp almost mock them every single one of their earnings calls over the last year or so, tell them that they don't know what they're watching in terms of the business and that the stock is not overvalued. And I know a lot of people are going to comment that the stock is overvalued. This is still in a valuation discovery phase. It's an early stage growth company, so it's very hard, like back before 2000 and the dot-com bubble, honestly. Before all of that, when we had a hard time putting valuations on companies like Google, on Amazon.com, on anything. Microsoft traded software, or they sold software, so they were a little more reasonable, let's say, in terms of valuation. But you're finding Palantir in that same situation where the market is finding it hard to pin a valuation on the stock because it is growing quickly. Retail investors have accepted that and said, I'm looking forward to the horizon. Wall Street still wants to see a little bit of proof, but they're starting to crack a little bit here. Therefore, if we get another 15 to 20% pullback in the stock, I think you're going to see some of these holds move into the buy camp, and that 16% is going to start going up above 20, and there is a very significant number of analysts covering the stock. It's just once they start to come off of that hold, analysts like to follow other analysts historically, and you'll start to see more migrate into that buy camp, and that is going to give retail investors and others out there the confidence to say, yeah, let's go ahead and ride Palantir higher. Where do I think that happens? I think it could happen at that 15 to 20% pullback, which puts us down at the 200-day moving average. So let's take a look at the chart in terms of the outcome, and then I'll go through my short-term and long-term outlook for Palantir shares and where I see the buy the dip opportunities. So right now, we're eroding that $150, that 50-day moving average, and I believe that that is going to serve as a tipping point, that line in the sand. And once we cross below, we'll see volume start to increase on the sell side and immediately start to pull us down to that $140 level. Now, that's good, but it's not enough. At that point, most of the market outside of you guys is not looking at that peak open interest call. All the people that have hedged those options or own them, they're looking at it for sure. But you'll see that activity start to unwind, and 125 turns into your peak open interest put strike, and that is where you start to see the stock turn into a buy the dip candidate. $125 is the first level, and then $110, and that is exactly where you find that 200-day moving average. Palantir has not played around with its 200-day moving average in a long time. So if we touch that, you're going to see the market start from algorithms to retail investors to anybody who's been watching Palantir. You'll start to see the flows come into the stock preparing for what should be an October bottom, or maybe even a little earlier, and that well-known rally that we see for technology stocks and usually the rest of the market that runs from middle of October all the way through Thanksgiving and into the end of the year in most cases. Things that could change that this year, obviously we still have tensions around the tariffs. We have some global, call it geopolitical concerns that are out there, and just a lot of uncertainty about the economy and where it's heading. All of those are going to get answers here over the next month or two. And we've also obviously got interest rates, but that's a different story altogether that we'll talk about at some point because there are a group of stocks that favors. But that $110 and $125, those are the levels that you start to see some buying activity coming in on Palantir and where I would be adding to my bullish positions. And just for full disclosure, I am bullish on Palantir. I own 2027 leaps on the stock. I don't own the shares. I've just chosen to leverage it with long-term options that expire in 2027. Short-term, I am right now hedged on Palantir on those leaps with some short-term puts that expire in November. Notice I give myself a little bit of time when I'm trading these options just to let the trends play out so that I don't get zapped in a couple days worth of trading volatility. So over the short term, why do I have those hedges? Well, right now we've seen $150 that has acted as or formed a line in the sand for the stock. The options market, as I mentioned, it was too optimistic ahead of that earnings report with the September 140 calls being the peak open interest call strike. And I think that is where you start to see the risk of a pinning coming in before September 19th. So down to that 140 level. A break below that 150 leads to a fast and aggressive breakdown to that 140. And then any additional pressure, 140, takes the stock down to 125 next, and a break of that goes to 110, which is a 200-day moving average, where, as I call it, that's where I back the truck up and start going even longer on Palantir. I think that you see the volatility through September and into October lead to those price levels. Over the long term, I remain bullish on the stock right now, as I mentioned a couple of times, still in early discovery mode right now in terms of where Palantir is going on revenue and earnings per share. And as it catches up to the market, which it is, the market's going to start raising its expectations, and you'll see the Wall Street analysts start to go from holds to buy. And that is why I think that you're going to continue to see outperformance against the S&P 500 and the NASDAQ 100. The September pullback, let's consider this a well-timed, healthy correction. Seasonality usually plays out weak in September, and it gives you opportunities. I always tell every investor out there, put together your list of stocks that you want to buy and at what prices you want to buy them during September and October, that volatility, and turn the volatility into your friend. It doesn't have to be something that you fear. When the stock market starts coming down, you are simply buying them at a discount from where they were trading a couple weeks or a month or maybe a month and a half ago. But you're taking advantage of that volatility and turning it into your long-term friend. So the healthy correction is a good thing for Palantir. Normally, those healthy corrections go as deep as 35 to 40%, I mentioned. 125 is where I buy on the first dip down, and then 110 on an extended level, and that is, again, my back the truck up level. And that's where I think you start to see analysts come off that hold because they've seen the company continue to beat and raise their estimates, and we're seeing the contracts coming in. It is a bullish fundamental outlook once investors, especially Wall Street, get over that argument that the stock is just simply overbought. Keep in mind that you only get an opportunity to really value the stock on that earnings per share and that revenue metric 4 times a year. So everything in between those 4 days of the year is more or less the market and where it is speculating the stock will go. And I always say speculation is always more powerful than fundamentals, and we've seen that with Palantir and its heavy returns to the upside. There you go. 125 and 110 are the prices that you're looking for. A break below that line in the sand at 150 triggers a move down to 140 very quickly. You'll see the stock kind of hover there for a little while, and I do believe that seasonal weakness takes us a little bit below as everybody's nerves are getting a little bit frayed. And that's where your 125 and 110 come in. And remain long on the stock. Those of you that have the education and the experience in trading options can look at leveraging the moves using leaps like I have the 2027 leaps. There are some downsides to leaps, of course, but there's also downsides to owning individual stocks as well. Make sure you have the education and the experience before you start buying leaps. So that'll do it for today. As always, I'm Chris Johnson with Monday Morning, wishing you the best trading success. Have a good day.